Whenever you see a forex trader coming inside on the screen for an hour, for hours, or hypertensive just at a little drawdown, probably he has not performing his analysis, especially the top-down analysis. Know the bias of the market, the overall bias of the market from the higher time frame, and mark your structures and your POS. Once you've done that one, you relax whenever you enter market, whether it's going against you. It's either he hits the stop loss, or take profit, or you close it manually. So you don't just jump to the market at any impulse. Whenever you see a candlestick just surging up, you place a buy, or you see just surging down, you place a sell. That is wrong. If you don't know, go and learn. When you learn, forex is not magic. It's not abracadabra at all. When you have correct knowledge, you trade at ease, just at ease.
Okay, I just want to give an overview on gold on next week. There's a say that if you fail to plan, you plan to fail, or the way you make your belt the same, you sleep on it. So as a pro trader, you have to plan either your week or your day. You don't just, because of emotion, you jump into the market. You know what will happen. You have your finger bumps and you just lose. So you need to look to check the overview, the bias of the market, which you need to engage a top-down analysis, from the higher time frame, then come down to the lower time frame for your entry. So right now, this area, like as a day trader, I always start my my setup from daily time frame down to 15 minutes. So right now, I've already marked this line. These have been trend line. Gold has been on bearish for a while until this very time, until this moment. Look this place, you see this place, this very place, then that's now break this line. You break the line upward, so turning to bullish. Okay, so if you now look, let us zoom out. If you look at it, you see that this place that I draw this box is just a major resistance. It has been demand zone, but now a strong resistance. If you look at it, the candlestick have been resisting from this side. So right now you see that the candlestick is still inside this box. It has not closed above. If this thing have closed above, we'll be thinking of going up again, but right now it's still dancing within the box. So look, I will still go down to 4-hour time frame to check all my zone to check a point of interest. So if you look, you're still inside that box. If you check very well, you see a kind of pattern formation. This a particular area, the candle have been rejected three times, you see. So if you even looking at this, try like forming it's like forming head and shoulder. But right away, what is first, just find out that the candlestick have been rejecting this 4-hour time frame. So I will still go down to 1 hour. Okay, I've been in 1 hour, sorry, 4 hour time frame. Okay, 4-hour time frame give me a very good look at it. You see that rejection. So this one has already, I didn't enter this trade. It was only the buy, so I didn't enter the trade at all, because this one could have given you a reasonable cash flow. But right now, what we might be expecting is for this 4-hour time frame, you might be expecting something like this. To this line, let me just choose this line, what line, arrow marker. Now it's either this from here, it goes up to retest this line. That's the probability. So if you retest this line and you break it and you wait, I'm talking, you need to go down to 50 minutes time frame to do this. If you say that this is going toward that and you confirm in a 50-minute time frame and it break this line, then the candlestick close over this box, then you know that the buy will continue. But right now we are planning for like shots.
The worst
Because
scenario.
this guy get to this place back, and I'm expecting that if you get to that, the market will sell. Why? Because there are a lot of FFG, there are a lot of fair value gap that you need to mop before you will now continue upward. So let's look at it. We've already checked the 1 hour and it correlates with the 4 hours. So let's go down now to 15. Now let me zoom out. Let's zoom out so that I can see very well. Look at it. See what we are thinking. We are talking about this. We have the boss, the boss. I don't know why it's not showing here. The box for drawing, and this, this list here. So this list and this. So that's what we are expecting. That is either it come and hit this box, then it come down to do what? To sell. Are you getting it? It come down to sell. That sell now to go and clear, to go and mop the liquidity. So or it's also two things I'm trying to get here. Hello, two things I'm planning to get here is this. 15 minutes. Is this? I'm planning for this. Let's say short. Actually, I'm planning from the in case it moves for short. For short. For short. For short. For short. For short. You get full shoe. For short. Yeah, for short. Or longer. Or for long. For long, in case you break the for long, in case you break the candle, it break this resistance. In case it break that, it close, it break that this box, it close up. If the candlestick finally go up and close above this box, then it makes the bullish continues. So right away, this is the outlook of the market for Monday. So cheers.